Good afternoon once again, and welcome to Lecture 2 in relation to IAS 33, Earnings per Share. In this lecture, we will be focusing on the calculation of the weighted average number of ordinary shares outstanding during the period, which, if you remember from Lecture 1, is the denominator in the calculation of basic earnings per ordinary share. So essentially in this lecture, we will be focusing on learning outcomes 7 to 11. Before we get into the nitty-gritty, I would just like to remind you how the basic earnings per ordinary share is calculated. We take the earnings attributable to ordinary equity holders and we divide it by the weighted average number of shares outstanding during the period. Now, as I said yesterday, the denominator is quite a mouthful, so we commonly refer to the weighted average number of shares outstanding as the WANZO. Now, the calculation of earnings was covered in Lecture 1, and today we will take a look at the calculation of the WANZO. Now, the WANZO represents the shares that were in issue during the financial year and the shares that were therefore entitled to participate in the profits for the year. Before we can dive into the calculation, we first need to understand when a weighted average number of ordinary shares outstanding must be calculated. IAS 33 paragraph 20 very specifically states that a WANZO will be calculated when the ordinary shares outstanding during the financial year varies. The number of shares in issue is not constant, and then we need to calculate a WANZO. When this is the case, the weighted average number of ordinary shares outstanding will be calculated as the number of ordinary shares outstanding at the beginning of the period, adjusted by the number of ordinary shares issued or repurchased during the period. When we adjust for the number of ordinary shares issued or purchased during a period, we will need to apply a time weighting factor. And a time weighting factor is the number of days that the shares were outstanding in the year divided by the total number of days in the financial year. When we calculate the WANZO and take the variation in the number of ordinary shares outstanding into account, it is vital that we know how and why the changes in ordinary share capital arose, as the how and the why determine the treatment of the change in the shares. Changes in ordinary shares outstanding can form part of one of three categories. The first category is for value. This basically means that in return for issuing shares, we as the entity receive something in return, something of value. The first way that we can receive something for value is that we can issue shares for cash. We issue shares, we receive cash. We can then issue shares in exchange for assets other than cash. For example, we can issue shares and receive a piece of equipment in return. We can also issue shares as part of a business combination or to acquire a majority interest in another company. So in consolidations, you are typically told, we paid 500,000 Rand for a 60% interest in this company. Well, instead of paying 500,000 Rand, you could issue 50,000 shares in your company, and that is then deemed to be consideration, and it is a for value share transaction. Lastly, we can issue shares as a result of the conversion of a debt instrument. For example, convertible debentures could be converted into ordinary shares upon maturity date. When we have a share issue for value, we apply the time weighting factor to the number of shares issued during the period. The second category is for no value, which basically means that there is a change in the number of shares outstanding, but as an entity we have not received nor paid anything of value. The first way in which we can have a no value transaction is if we have a capitalization issue. Think back to IFRS 9. What is a capitalization issue? A capitalization issue takes place when an entity increases the number of shares in issue by providing an additional number of shares in relation to the shares already outstanding. For example, shareholders may receive one additional share for every 5 shares already held in the entity. Secondly, we could have a share split. A share split takes place when an entity increases the number of shares in issue by essentially stating that 1 share held is now equal to 2 shares. We then have a share consolidation. Now, a share consolidation is the exact opposite of a share split. The number of shares decreases instead of increases. And then lastly in this category, we can have a reduction in share capital. When we have an issue of shares for no value, we restate the comparative period's weighted average number of ordinary shares outstanding. The third category is a combination of for value and for no value, and we have this when we have a rights issue at less than fair value. There will be a further explanation and example dealing with this specific category later on in this lecture. The first event in Category 1, the for value category, was the issue of new ordinary shares in exchange for cash. Very importantly, when we issue new ordinary shares in exchange for cash, we need to determine the date on which the cash is receivable, as this is the date from which the shares can be included in the WANZO calculation. It does not matter what date the shares were actually issued or the date that the cash was actually received. The reason for this is that as soon as the cash is receivable, we as an entity have an obligation to issue the shares. Once you have established the date that the cash is receivable, you need to weight the number of ordinary shares according to the period from the date that the cash is receivable to the end of the financial year. Once you have weighted the new ordinary shares, they can then be included in the calculation of the WANZO. Let's take a look at a simple example so that you can familiarize yourself with the layout of the WANZO calculation. Example 5 can be found in your Notes and Class Examples handout. The information reads as follows. Number of shares at the beginning of the year is 100,000. Number of shares issued during the year for cash, 10,000. Cash is receivable on the 1st of July 2020. Shares were issued on the 31st of August 2020, and the year end is the 31st of December 2020. Required, calculate the weighted average number of ordinary shares outstanding for the purposes of determining earnings per share in accordance with International Financial Reporting Standards. The first thing that is important to determine is the date that the cash is receivable. This example made it very clear that the date that the cash is receivable is on the 1st of July 2019. So those ordinary shares that were issued will be included in our WANZO calculation from the 1st of July 2019. Now we are working with an entity that has a year ended 31 December 2019. So that means that the period of inclusion for these new ordinary shares is from the 1st of July 2019 until the 31st of December 19. If you count on your fingers, that means that these shares need to be included in the calculation of WANZO for 6 months. So your time weighting factor is 6/12. For purposes of simplicity, we generally use months instead of days, even though IAS 33 does stipulate that you should be using days when you calculate your time weighting factor. The reason that we stick to months is just because students very often get confused about how many or what the number of days is in each month, and then there's a disparity in the number of total days used in the calculation, which causes some confusion. So for purposes of simplicity, in these examples, we use months. Now we know that we are working with the 2019 financial year, so when you go and calculate your WANZO, I would start becoming very comfortable with this table that you see on your screen. So on this table, we have a column for 2019 actual number of shares, then we have a column for the 2019 weighted number of shares, and then generally you would also have a column for the 2018 weighted number of shares, so a column for the comparative period. Now, at the beginning of the financial year, we were told very explicitly that the shares in issue amounted to 100,000 shares. So we actually had 100,000 shares in issue. at the beginning of the year, so that is why it goes under our actual column. Then we also take 100,000 shares to our weighted column because these shares were in issue at the beginning of the year. There was no information that any of these shares had been sold or repurchased or whatever the case may be. So that means that we had these 100,000 shares for a full 12 months. 100,000 times 12 over 12 gives you 100,000 in the weighted column. We then go and look at the shares that we actually issued during the current financial year, and these shares are deemed to have been issued or to be included in the WANZO calculation from the 1st of July 2019. We actually issued 10,000 shares, so I put 10,000 shares in my actual column because these are the number of shares that were actually issued. But we know that in the calculation of basic earnings per share, we don't divide earnings by the actual number of shares in issue at the end of the year. We divide it by the weighted average number of shares. So that is why we then need to go and time weight our 10,000 shares in order to get the weighted number of shares for the 2019 financial year. Now, we said earlier, our time weighting factor would be 6 over 12. So in order to get the weighted number of shares, we take the 10,000 shares actually issued and we multiply it by our time weighting factor of 6 over 12. That then gives 5,000 weighted shares. So we then go and put the 5,000 in the 2019 weighted column. That means that when you go and calculate your basic earnings per share, you will take your earnings and you will divide it by 105,000 shares. We always use the value in the weighted column, not the actual column. We just keep the actual column to orientate ourselves as to which transactions we have accounted for and to how many shares were actually issued. But when we do the calculation of basic earnings per share, we always have to use the value or the number of shares from the weighted column. In category 1, the for value category, there are then 3 other scenarios that we are going to look at. There are examples relating to each of these scenarios in your notes and class examples pack, which I will not be going through with you. When we have new ordinary shares issued in exchange for assets, the shares are deemed to be issued on the date that all of the risks and rewards of ownership of the asset have been passed. So as soon as the risks and rewards of ownership have been passed, the shares are deemed to be issued and therefore they can then be included in the calculation of the WANZO. When we have new ordinary shares issued as part of a business combination, it must be assumed that the equity shares were in issue from the acquisition date. So the acquisition date is the date that the shares can then be included in the calculation of the WANZO. When we have new ordinary shares issued in order to acquire a subsidiary, the shares are deemed to have been issued on the date from which the profit of the subsidiary is included in the earnings of the group. So what that means is, if, for example, shares were issued on the 31st of March 2020 in order to acquire the majority interest in a company, so in order to acquire a subsidiary, but then the profit for the year was included in the group results from the 1st of January 2020, that then means that we can include these ordinary shares in our calculation of WANZO from the 1st of January 2020 and not the date of actual issue being the 31st of March 2020. The last event in category 1, the for value category, is the fresh issue of ordinary shares as a result of the conversion of debt instruments. Now, when we speak of the conversion of debt instruments, we are generally referring to convertible preference shares or convertible debentures. The shares are always deemed to have been issued on the date that the entity stops accounting for interest in relation to these convertible instruments. Therefore, the shares are deemed to be issued on the date that interest ceases to accrue. The shares will be time-weighted from the date that interest ceases to accrue, and this can then be included in the calculation of WANZO. Let's take a look at an example to ensure you understand. Example 11 can be found in your Notes and Class Examples handout. The information reads as follows. The company has 50,000 ordinary shares in issue on the 1st of March 2014. 10,000 15% convertible debentures with a nominal value of 100,000 Rand were also in issue at this date. The interest dates are the 30th of June and the 31st of December each year. The debentures are convertible into ordinary shares by option of the issuer on the 31st of December 2014 in the ratio of 10 ordinary shares for every 100 debentures held. The 15% is market related. The shares in respect of the conversion rights were issued on the 15th of January 2015. The company's financial year end is the 28th of February 2015. Required. Calculate the weighted average number of ordinary shares outstanding for the purposes of determining earnings per share in accordance with international financial reporting standards. First things first, we need to determine the date that the interest ceased to accrue. Now, these debentures were converted to ordinary shares on the 31st of December 2014. So on the 31st of December 2014, you no longer had to account for interest on these debentures because they were going to be converted into ordinary shares. So therefore, the date that interest ceased to accrue is the 31st of December 2014. We know that the financial reporting date is the 28th of February 2015, and therefore the period for which the shares are deemed to be in issue goes from the 31st of December 2014 until the 28th of February 2015, which is a 2-month period. So that means the debentures need to be time-weighted by a factor of 2/12. Now, once again, when we calculate our WANZO, we have a column for the 2014 actual amount of shares and then a column for the weighted number of shares in 2014. We know that at the beginning of the 2014 financial year, the shares were in issue amounted to 50,000 ordinary shares, so that is the actual amount of shares in the 2014 financial year. We also then know that we had the full 50,000 shares for the entire financial year. Therefore, in the weighted column, we also have 50,000 shares. But then we know on the 31st of December 2014, we went and converted these debentures into ordinary shares. That is the date that interest ceased to accrue. Therefore, that is the date that we can include these shares in the calculation of the WANZO as per IAS 33. Now, if you go and work it out, you should get 1,000 ordinary shares issued. And how did we get that? Well, from the information, we know that there were 15,000 debentures, and we know the conversion rate is 10 ordinary shares for every 100 debentures held. So if you go and take the 15,000 debentures, you divide it by 100 debentures, you divide by like things, and then you multiply it by 10 shares, that then gives you that this company would have issued 1,000 shares on conversion of the debentures. That is in the actual column. But now we know that we need to weight those 1,000 debentures by my time weighting factor of 2/12. If you take 1,000 shares and you multiply it by 2/12, you then get that the weighted number of shares is 167 shares. That means that in our 2014 weighted column at the end of the financial year, we have 50,167 shares. That 50,167 shares is the number of shares that needs to be used when calculating our earnings per share, as that 50,167 shares represents the weighted average number of ordinary shares outstanding during the year. That is where we are going to end today's lecture. Please go through the questions and the examples as stipulated in your daily work schedule relating to everything that we have covered in Lecture 1 and 2, and we will then start fresh with Lecture 3, whereby we will be looking at the Category 2 and the Category 3 items. Have a good afternoon.